CRT and Turtle Soup secrets. Connecting the dots. Now, Romeo have already made this video. Now, I agree with what he said in the videos, but that's more on the beginner side, beginner friendly. Now, this video is going to be more on the advanced side, right? Advanced side. Now, as you guys know, this as he preaches to always look for either true market shift entry or look for the model one. Now, if you were to look for the model one on this trade, you would have not been able to catch it out because it's a big candle. There's no R on this. You can barely have any R on this trade. First, secondly, can we catch it? Because you never confirmed it. So you would have missed out on the 4RR. Now, this video is specifically on the same topic as him, as he's talking about the video, but much more detailed. Now, the video is overall about entry models, about the top-down analysis on how I specifically trade CRT and Turtle Soup. Now, I've already made a video about this on my one-on-one session with Kankara. Right, you could watch the recent one-on-one session, which talks about how I scale up, how I scale down from the 3-month all the way down to the 15-minute, 5-minute, or even 1-minute to execute. That's basically how that's what he meant from the video, right? Take the high tipping candle and do market profile in the lower time frame, but that's too broad, right? You won't know. There's so many candle profiling, right? How do you know which one to pick exactly? Now, how do you know to pick the way you can know is by scaling down from the 3-month all down to the daily, to the 4-hour, to the 1-hour, to the 15-minute, to the 5-minute, and take that specific candle, not these random, not the random Wednesday candle, not the random Thursday candle, but Friday specifically, right? This is why that's why my views are more advanced than his, because it's more beginner friendly, right? Because so many candles here, right? There's many candles. So how do you know which one to trade specifically? Is by Turtle Soup and CRT, and by scaling down for the 3-month and downwards, right? Now, once you scale down, you will not know about the auto blocks. That's what you gotta learn. That's why I already made a video on this. You can go watch it out also. Auto block like these, they never get left out, right? They never do. Now there's SMT with this one. There's another SMT with this one. Now you may question like, well, this auto block already got filled. Why did it have to get refilled? Question like that. Because you need to get refilled. By the time it got filled the first time, the order block never got confirmed on the dollar. Because no, dollar is much more important than the euro, right? Because it's a world currency, so it's much more important. That's why we always prioritize DXY over EU. Now, that's one. Now, one more thing. As I said before, this video is gonna be advanced, and I'm gonna show you guys how to take trades like this. Now, as you guys know, entry model right over here is a 505 mark. But like that entry is insanely impossible. It's not impossible, right? It's very easy, actually. Now, this entry model actually was from himself again. If you check his recent video right now, like connecting the dots, he talked about the fair value gap above an old high and below an old low. Now, he also talked about the order block above the old high and below the old low on his old teachings on 2023, also with his courses, right? Now, which is the order block above an old high or below an old low, right? Order block below old high and below an old low, a specific candle. You can see the fair value gap entry model and the order block, they paired, which means higher probability. So you enter the order block. Sometimes they may not be together, so you enter fair value gap. Sometimes the fair value gap not be there, you enter the order block, right? So you always look at it like that. Sometimes the fair value gap, the order block is nowhere near, and there's a fair value gap. You enter the fair value gap, right? But at the end of the day, they're both, regardless, above an old high. Every candle below this high right here is a liquidity pool. So old high right above it is our entry model, which we enter, which the best entry model for Turtle Soup is always going to be an order block above an old high or below an old low, because they're the ones to guarantee you almost zero pip, zero tick, and zero drawdown. You usually always get instant reaction, always, always, always. Now, this may seem like, okay, it's only one example. Show me more example. Show you guys more example. Let me eyeball this right over here for you. Where is it at? Could be right here. Now, this may seem like there is no such thing as zero to the pip to the tick entries, right? Now, it's not always guaranteed, but it does happen. It can happen. Order block, if I get paired, the liquidity, we already contested beforehand, to the pip, to the tick entry, right? And I already talked about this auto block entry models a long time ago, so go watch it, watch the videos. But connecting the dots, as he said in his video, when you do trade, if you're a beginner, I always suggest you also trade order blocks and true market shift. Only trade after the true market shift. I do also agree with that. But as I said, this video is about more advanced, or way more advanced. Now, steps to having steps to trading, right? What are the steps in order for you to trade? Which would be step one: pick the higher time candle, right? What time frame are you going to trade? Would it be the daily, the weekly, the monthly, the 3 month, right? Step two is your market profiling, right? Same thing he said in the on the video, but it's just not gonna be market profiling alone. Yes, we're looking for a pop above an old high or a dump below the old low, but we're looking to pair it up with multiple things such as weekly profile, daily profile, specific time of the day. We're looking for it on the daily ranges, right? Important key levels, we're looking for it, and the order block needs to be traded. So we're looking for a pop above around here, right? If you look for a pop above here, you are gonna get slandered, right? Why? You're gonna take a short, but without you knowing, there needs to be a deeper retracement before going down lower. So you take a premature short and you get stopped out, right? So that's why it's just not about market profile. You got to do multiple things before you can market profile, right? Which all of them will lead to market profile, but it will give you more details, right? As you guys know, if you want to be 1%, you can be very focused on detailing, right? You can be very focused on being very detailed on your setups, on your trades, right? Thus, why I have entry models like this. I've did this before, way multiple times before, right? And I don't even take model one anymore. I don't even take model one trades anymore because to me personally, I count them as low probability. I count total soup higher probability than the model one. Why do I do that? Why do I say that? Because sometimes, as you guys know, total soup always comes first. So if you enter before the total soup and you get a model one, too sad, too bad, total soup. Don't see it, stop that, right? Sometimes market give you model one, you get stopped right away because total soup wasn't there. The total soup needs to be there in order for it to be. Total soup always comes before the model one, right? CIZ is basically change state delivery, which needs to take out liquidity, which in order for take out liquidity, to be some sort of liquidity to be taken out, which that liquidity pool is going to be your entry model. It's gonna be this total soup, right? If it's not there, it's gonna give you that pattern, but it's not gonna work out, right? So that's why I don't take model ones. And I always count total soup entry model. I used to hate total soup entry models, right? I'm not gonna tell you guys because I was very bad at it. But now, recently I'm loving it, right? Not even recently, like 3 months ago, 4 months ago, I've been really loving it because I've just been very obsessed with it because I've seen Romeo and all the guys, his mentees, right? Having very solid total soup entry models. Like, man, I gotta dig into the chart. Eventually found out myself, and all I had to do is go back in his tweets, go back in his old courses, and just pay attention to the words he said. And the intercentury model, the old block above old high, he said it on the Twitter. And I'm not sure if he said it on his course, but where I got it from was on Twitter in 2023. Now, enough of that saying. I want to tell you guys what to look for, right? Now let's get to the technicals. How do you plan to trade, and how do you trade it? How do you trade the plan? Now, let's say first step is to always have the hard tipping candle you want to trade. Now, what I mean by the hard tipping candle the candle you're going to use to execute, whether it be it weekly or daily or the monthly or the 3-month candle. Once you get that, step 2 is always going to be what? Step 2 is always going to be market profiling. Now, it's not okay. You can't just say market profiling in a very broad way. You have to go very detailed. That's what I said. Daily ranges. So we call it important key levels, order blocks. The ones right here I showed you guys. Power above down below daily CRTs, above power above daily CRTs, down below daily CRTs. There's multiple things you need, right? Weekly profile, daily profile, right? Etc. Right? Which you don't need a lot. You just need to focus on daily ranges, weekly profile, daily profile, power above, down below, above daily levels and below daily levels, right? Above daily levels, you're looking for pop above, right? You're looking for power above, down below, above daily levels, right? Daily levels and above. And that's all you need. And you need the order block as your retracement. Order block usually means deep retracement are going to happen rather than a small retracement. And dump usually going to mean a deeper will happen. So basically a deeper OTE, right? So that's all you need for the market profiling. Your pop above down below, daily levels and above, which is your daily CRTs and above, right? That's your market profiling right there for you, right? Profiling. Now this one you could have traded it, right? I pointed out this. I pointed this out on fucking. I pointed this skill out to get you traded to on. I'm pretty sure Wednesday, right? I can show you guys a picture here real quick. Just show this photo right here. Show you guys this photo like way long ago, right? Right. I show you guys this photo way long ago, right? This pretty sure that's Monday, Tuesday, Wednesday. I show you guys this on Wednesday. You got retreated to on Friday, right? So I'll show you guys way before. So you could have traded to the key level, but I avoid that because I personally feel inconfident when I do so because I'm not too good at taking reversing trades that it is to the key level. I usually like to take the trade the reaction from the key level. Why do I say that? Now the reason why I say that is simply because you pay close attention here. I don't need it. I don't need to risk the other one because why? I risk about 5% on this specific trade alone. There's no need for me to daily trade because if let's say I somewhat lose a trade, now I just lose 5%. If I lose here, I'm very confident in the trade. So if I lose it, cool. I'm just gonna reanalyze and see where the market goes. The next trade, I like to be a win, right? So that's why. That's why I like to take trades away from the key level because I don't risk. Yes, in profit only 1%, but personal accounts risk up to 5%. So rather than me risking 5% every single trade, I'd rather risk 1%, one specific trade, which can give me enough money, right? Which 4 hours not enough RR, right? Because this trade is considered to be low RR because the daily time frame is clearly breaking out, clearly breakout on a daily time frame. So targeting the 50% mark of the range that was traded during that specific day, the target. And this is something you learn throughout executing, right? Because I learned this through me executing the market. I was like, okay, cool. Market, as you guys know, ranges either get respected, which means a total soup and respected, or it gets broken through. When it gets broken through, that means like this CRT is not getting respected. That means it's literally getting broken through. So it's stupid for you to hold a trade. You're taking a short if you top ticked it, right? It's stupid for you, okay? So what you gotta do is get out of it because you know it's highly likely going to reverse back up higher. Like last week, there's a good example here, right here. Now, if you were it would be stupid for you to, which would be this trade right here, right? I'm pretty sure. It would be stupid for you to hold this short down because look, this high is going like, well, what high are you being marking out, right? Marking out the old high above a order block above the old high, right? It's old high over there. Because we tap the order block first, right? So it would be stupid for me to hold that trade even lower, like that's a 6 hour trade. It would be stupid for me to hold a trade all down here because daily time frame is clearly showing me it's gonna get broken above before going down lower. Right? So if you can get broken above, there's no point of me holding a trade. Yes, but like, oh well, where you gonna take a short where you taking a very low RR. That's a 4 RR. That's a 6 RR. I would take that more than anything else, right? I would take that because he adds digits to my banks. He regardless makes me money, right? I'm not greedy. Right? Don't be greedy, because when you're greedy, that fucking trade right here I just showed you, that specific example, that trade became that trade became a break even because of it. Like, I got greedy. I was like, that's not enough, right? And I was like, this. I mean, I probably made a bullshit rule, but he would get them back testing it. I was like, this is not a bullshit rule. This is actually true, right? Because market actually breaks out. Right? What's a simple rule? Either you get either the range get respected, and or it gets broken through, right? This gets broken through, so talking here is very nice. Now, we're getting a little bit off guard here, but let's make an example. I'll show you guys of order blocks. And once you get your higher time and key level, well, let's go where we left off. After you get your higher time and key level, you want to trade, and you do market profiling. Now, once you get your high time, you want to trade, whether it be at 4-hour or daily. Now, you always want to look for a daily level. So your key level must always be a daily. Now, a key level to pay attention really close to is not going to be your fair value gap. It's not going to be your order block, breakup block, last successful liquidity. It can, when I say it can be, but it's not always going to be there. So your key level could be your CRT. A CRT in a lower time frame plays as a role as a market profiling, right? It plays a role as an old high. So looking for a power above that old high, which on a daily CRT and a daily candle, it's just gonna look like it's just a random daily candle. But a lower time, it's gonna look like it's an old high, right? So you're looking for a power above down below, which that right there plays a role as a key level, right? So that's the next step. Now, once you find your highest mechanical trade, now personally for me, it's gonna be the it is gonna be the daily candle. I want to say about daily candle. What I mean by that time that pick the specific candle you're gonna trade. What I mean by that is gonna be the key level, right? The time frame looking for that key levels to get tapped and traded, right? Now, once you get that key level from the daily time frame or whatever type you pick, you need to go down to lower time frame than it to execute that key level. Now, for me, it's from daily to 4-hour. For 4-hour, 15-minute execute, right? Eventually, if it's from daily, sometimes maybe from 1-hour time frame also, if it's a new situation, like hourly candle. So you can go from daily to hourly to 5-minute or 1-minute, execute, or long it or short it down. So, but my daily, my specific candle I'm always gonna trade is gonna be a daily level and above, right? Now, the candle I'm targeting will always be weekly candles, right? It'll always be weekly candles, monthly candles. It will never be daily, because my rules, my system is set to give me very high probability targets, which is always going to be the weekly target. Now, why do I not target it with daily? Because I'm looking for a daily level. There's no point of me targeting another daily level if I just got my setup, if I just got my my key level from a daily level. It would make much more sense for me to target the weekly or even the monthly possibly than another daily level, right? Because think more, right? More, right? Now, don't be greedy on it. Always be competent on it, but don't be greedy on your take profit on your RR, right? Just don't be greedy on that. But other than that, usually always want to go for a weekly level, weekly CRT target, which is always going to be a high probability target. Now, that's that. Once you get your daily level, once you pick your specific candle, then you will need to go back even higher than that time frame from your key level and start analyzing the market. Start thinking, okay, through time and price, think where can market possibly go, right? Time, price, which price could be CRT, time could be also be CRT, etc., etc. So now, once I pick my daily level, I'm gonna scale down. I'm gonna go to higher time than it, which is the 3-month, which is always have to be 3-month and above, right? That's where I start, right? Because sometimes I will analyze at 12-month. When I analyze the 12-month, I will usually always go to DXY, because DXY have a 12-month fair value gap. They told me SMT. That means the good sign for me is gonna go up higher. So to me personally, 12-month is gonna go up higher until a specific level before dropping down. Because right above this old high, there's a provide gap, which can cause a reversal, etc., right? So now overall, why? Overall, there's a range here, right? There's a range. Focus price, going to reach high, right? So that's why. So I pick my highest friend level, like the 12-month, price-based analysis, which is going to be CRT ranges. To get that 6-month time frame, I'm looking for the same thing, price-based only, because there's no time in the 6-month time frame. 3-month time frame, this market goes based on quarterly. They control the market specifically around the quarterly candles, right? On a quarterly candle, now I'm looking for time and price. So we quarter one manipulation, quarter two expansion, eventually it's turned into range. Quarter three manipulation, quarter four expansion. Now you see point like, well, the monthly candle already got souped. How did it get resouped, right? How did the quarter three candle resoup the first month out of the quarter of quarter three? Because SMT diverges, right? SMT will prevent soups from happening, so you'll cause reversals on a monthly time frame. It will target the low. Eventually, now you know, okay, market will go up higher because the SMT target already got met. So we're not looking for higher prices because there's an SMT with candle, right? SMT, that low was needed to soup, so we can expect another new high of the year for reversing, right? What's that? We're doing price and time. Now we know that, okay, cool. We had quarter one manipulation, quarter two expansion, eventually the range, quarter three manipulation, quarter four looking for expansion to the downside. Okay, so we got that. We're doing that above that specific candle level, looking specific candle. That's level we're looking for, right? Or specific candle all the time, right? So once we get that, that's our what? Time base. Now the price base is gonna be okay, CRT. Accumulation, manipulation, expansion. Okay, cool. Next example is gonna be scale out to low time. Once you get a 3-month time frame, scale out to the monthly. So every time you get your time frame analysis, you scale down to even lower time frame and go in depth. Now on a 6-month time frame, on a monthly time frame, once you because as I said, you gotta constantly scale down. On the monthly, look for the same thing here again, right? Accumulation, CRT, and time. So first month, this month, accumulation, manipulation, this month is highlight to expand. We're looking for expansion, right? So I also have CRT, accumulation, manipulation, expansion. Now, price also, right? As I said, there's a bigger CRT over here. So we have accumulation, right? Manipulation, which the time wasn't enough, which the time wasn't right. So we get another manipulation, eventually reversal, right? So our overall price-based CRT is here, but that time-based CRT is scattered over here, right? Accumulation, manipulation, expansion. Our price-based CRT is this right here. Accumulation, manipulation, expansion. Right? Eventually, we're gonna look for some sort of expansion candles, right? That's why, right? So we focus on time, price, they're both equal. So now we got that. Scale on to even lower time frame, weekly. Okay, so weekly time frame, what we're looking for again? Time plus price. Price being CRT primarily. Primarily CRT. Just focus on that. Avoid the confusion because there's a lot of candles here, right? Just focus on CRT. Okay, since we know the higher time frame wants to go down lower, all we're gonna do is look for a specific candle to go down lower, right? So if the 3-month time frame is telling us bearish, monthly time frame is telling us bearish, the 12-month time frame is telling us bearish, 6-month time frame is telling us bearish. The weekly now, since that time frame is telling us that very high time frame is telling us bearish, now all I need to look for the lower time frame is a candle, a CRT that goes with the higher time frame, right? So we now looking for these random candles, we're looking for a specific candle, which is right here. Get the downside, cool, perfect. Now as you can see, how I avoided how I avoided a lot of these candles. Just look for one specific candle, right? Specific candle, right? So now once we get that, scale down to the weekly, scale onto the daily time frame. Now you're looking for your levels, right? You're looking for the specific. So to you, it may vary, but for me, I'm a shooting trader, so I'm always looking for daily level and above. So on a daily time frame, I'm looking for my daily key level. Daily key level could be whatever, right? But my daily key level is always going to be what I mentioned. Now we have looking for a pop above. We're also looking when we're looking for a pop, we're looking to tap the specific key level, tapped it, and eventually looking for reversals. Once we have that, once we have a daily level, once we pick our specific candle, we're going to trade down to lower time frame to execute it. Lower time frame, we're looking for specific time manipulation, specific candle CRT. Is always going to be what? The Pacific candle we're going to trade is going to be either the London session or the New York session. Also, what else we're looking for? Pacific manipulation, which is going to be from 3 a.m. to 5 a.m. or 6 a.m. to 9 a.m. or 6 a.m. to 10:30 a.m. 9 a.m. I said the wrong word, right? 6 to 10:30 a.m. Now, other than that, we look for execution. So now once our lower time for CRT, whether we're trading London session or New York session, we're looking for that. If we're trading London session, looking for the A session to become a range and get souped. Looking for the same thing again, time and price. Looking for it to get souped, go down. We're looking for is to get souped at a specific time, I mentioned. Then what we're looking for is like what? Our entry model. Our entry model being a auto block of old high or a fair value gap of old high at the right time, and or the model one, whatever. But I always preach the auto block of old high, auto block of low, block of old high, block of old low, or when they're paired. When they're paired, always enter the auto block. The next step is always going to be look for the next entry model look for total soup is going to be fake double top, fake double bottom, and three drives. Three drives are highly not to happen in the market. But when it do happen, you can capitalize on it. Now, the way you know to trade three drives, I already made a video on that. Watch it out. So, other than that, as we look and you execute and you make your money, right? So, simple as that. Now, same video as Romeo connecting the dots, but more advanced. So yeah, thank you for watching. Make sure you guys like, comment, subscribe, share, join the Telegram link in the description below, and I'll see you guys inside the Telegram. I've already made a large video on this, which I had a one session with one of our clients, free client, right? But I'm not here to for the money, right? I'm here, like future, it'd be useless for me to go just like, okay, I'm gonna have it for free. It's just probably charging, but at the beginning, and because I could do you guys for free. But yeah, you guys again, but make sure you guys follow my IG, my TikTok. You guys inside the Telegram. Peace out.